Let's talk a little bit about the trade-offs of growth and profitability. And marketers are often tasked to drive efficient growth. It does reflect a little bit on where is the firm in its cycle and what's the time horizon that we're talking about. It's clear that over short periods of time, especially if you have access to outside capital, you may be in a high growth mode. You're essentially buying market share. But when you're doing that, you want to do it at the most profitable way possible. We don't want to buy the least profitable growth. We want to buy the most profitable growth. And there could be other periods of the firm where you really are optimizing for profit. And then we've even seen it for a firm that in the beginning of the quarter, they may be thinking a lot about profit, but they realize somewhere in the middle of the quarter that they might miss a number like that an investor's looking for, and they'll want to double down on growth again. So these things change. And again, they're not mutually exclusive. And they're not zero sum, especially when you're working with new marketing channels. At the very beginning, when you're putting new money into a marketing channel, there might be really a nice, pretty, and attractive amount of growth, and it may be highly profitable. What you should have your guard against is at some point, these ad platforms do not scale infinitely, and they're never going to call you up and tell you, you should stop spending on us. So it does fall on the marketer to figure out at what point am I still going to get the revenue, but at a point that the impact on profitability becomes negative. LiftLab is a system to understand the trade-offs of growth and profitability. And our particular winning approach to understanding those dynamics leans on an agile mix model paired with paid media experimentation that are all designed to speak the language of diminishing returns.